What's up, everyone? It's Mike Andes here at landscapebusinesscourse.com. Today, we're going to be talking about the thing that's eating away at your profits. Right now, I'm having a little bit of issues with my internet, so hopefully things are okay for you guys. We're going to be talking about inflation. If you haven't figured it out already, I want to, I didn't put this in the title of the video because if I put how inflation affects your lawn care business, no one would watch. But this is super, super important. So for the 20 of you that are currently logged on because you're eager beavers, I appreciate it, and trust me, you will want to stay for this one. All right, I'm going to try to make it a little more concise this evening, but it's about inflation and what it's going to do to your business. Now, you might have heard some recently in the news about how inflation is going to go up and why it's going to go up. I'm not going to spend too much time on that, but I am going to talk about how it's going to affect your lawn care business and what you need to do to adjust yourself for it. So, first of all, let's go over a couple little things. I'm going to spend 15 minutes talking, and I'm going to spend 15 minutes answering your questions. First things first. In the past, inflation is really a good thing for our economy. As long as inflation is kept in check, and for the past 15, 20 years, it's been like 1.5%, 2% inflation, nothing major, nothing crazy, and it's a very good thing. Now, the thing is this. When we talk about inflation, we're really thinking about the cost of stuff going up in dollars value. For example, how a loaf of bread, 25 years ago might have been $1. Well, now it's like $4 or $5. The cost of goods going up. And really in three major areas I want to talk about in relation to our lawn care business. Number one, the cost of labor going up as a function of inflation. Number two, the cost of materials going up as a function of inflation. And number three, which is not really related to inflation, but something I want to talk about tonight, and that is taxes. So how are these things going to affect your business, and why is it really important? So if you have no idea what inflation is, all you need to know is basically that things go up in cost over time. And a lot of this has to do with monetary policy, a whole bunch of different stuff. We're not going to get into the macroeconomics of what causes inflation, but you've probably heard in the past little while that because of all the money printing and stimulus that's been going on, that there's a really good chance that there is going to be inflation coming up in the next few years. What does that mean for lawn care business owners, and what do we need to do about it and prepare for the next few years? Let's get to that in just a second, but first I want to do a diagram and show some numbers behind why inflation is a really big deal and why it is absolutely eating away your profits. So we are going to assume that Bob, I don't care what name he is, the lawn care owner guy, let's just say Bob has his revenue for his business right now. Yeah, let's assume his revenue for 2020 was equal to $500,000. Okay, so that's his revenue for 2020. Now we're going to assume that he has a 20% margin. So let's go ahead and go 20% profit margin. Profit. So if we actually do the numbers on that, he is going to, at the end of the year, have a whopping $100,000 in profit. Pretty good little business, doing lawn care, doing landscaping, etc. So there's his profit, take-home pay, whatever you want to call it. That's his bottom line of his business. 20% profit margin on a $500,000 revenue business. Now, what does inflation do to his business? Okay, so over time, we're going to assume just 2% inflation right now, okay? We're going to assume 2% inflation comes along and starts eating away at his profits. So 2% inflation comes along. What that means is now instead of a 20% profit, that's going to slide down to 18%, okay? So at the end of the day, his $100,000 is going to go down because now 2% off of his profit is coming just in the form of inflation. Labor going up, costing more in labor, materials, mulch, dumping debris, fuel going up in price. Over time, 50 years ago, fuel was what, like 20 cents a gallon? I don't know. I wasn't around. So 2% is coming off this 18. So in 2021, let's do the math. 2021, now his 18% profit margin, because we're going to assume he doesn't raise prices. He doesn't raise prices on anything he does, but inflation is coming. Inflation is costing him more for materials, fuel, labor, insurance, all the rest of it. 2% is chipping away at this. So now he's at 18% profit margin because he didn't raise his prices, didn't change anything, didn't charge any more fees. 18% profit margin. I need to do my math better. 18% of that is going to be 2%. So that's 10,000. So now he's at 90,000. All right. So after year one, at 1 year goes by, he's down now to $90,000. So literally, inflation at 2% after 1 year cost him $10,000 in profit. 10% of his profit wiped out because of inflation. Everyone's like, oh, it's only 2% of your profit. No, it's not. It's 10% of his profit in 1 year that got wiped out simply because of inflation at 2%. Okay, now let's keep running the numbers. If we keep going along this path, 5 years later, so let's go to 2025. I'm going to assume 2% every year. Now remember, it compounds. So now 2%, it keeps going down more. So it's actually worse than what I'm about to show you. But if you run the numbers, after 5 years of 2% coming off every single year, he's going to be at a little bit above $50,000 in profit on this business. He's literally going to go from $100,000 a year in profit all the way down to $50,000 per year in profit, because now he's down to 10% margin. Okay. Now I know for some of you you're like compounding interest and all this other stuff. It does make a little bit of difference. It's not exactly 50,000, but you're getting my point, and that's all I need right now. Okay. So yes, it would probably be like 53 or 54,000 if you run the math. But anyways, he ran the same business. He's still doing the exact same thing. Nothing's changed. Still running his lawn care business. Nothing has changed. Pricing, nothing. And yet his profits are literally have been cut in half over the course of 5 years because he didn't raise his prices. And literally half of you listening right now that want to book a consulting call with me, which is definitely something you might want to do. So there it is. Half of you that need to book a consulting, let me save you the money. Let me save you, what is it, $399 now? Let me save you $399 by telling you right now, you need to raise your prices. And for a lot of you, it's because of this, inflation. As time goes on, and that 2% keeps eating away at your profit margins, then how your take-home profit is falling quickly. It's eating away. It's the silent killer, because there's not like a day on the calendar that's marked and like, oh my goodness, our profit went down. That never happens. It slowly changes. Your supplier now, all of a sudden, it's $40 per yard instead of $38 per yard for your material. Yeah, that is a 5% increase right there. That happens all the time. So if they every couple of years, they just do it every couple of years, they raise it a few dollars. That's like 5% inflation if they did that every year. So you've got to realize that the cost of materials, the cost of labor, and other things in your business are costing more money, and you need to raise your prices accordingly. So in this scenario, what could Bob do to counter the effects of inflation? What he needs to do is he really needs to raise his prices by at least 2% a year in order to recoup inflation. So for example, maybe he's charging $50 per hour. Okay, so $50 per hour to the customer. If he's charging $50 per hour to the customer, a 2% increase would equal $1 that needs to go up every single year. What that means is that if he would raise his price, his hourly rate to the customer by $1 every year, by the end right here, his hourly rate would be $55 because it's been 5 years. So $55 per hour is what he'd now be charging the customer in terms of labor. That's just the labor part that, again, inflation affects labor. You'd have to do the same thing to your material cost. So if you're charging the customer $50 per yard for material, you'd also need to charge them $1 more per yard per year. So again, same thing needs to happen for all your materials and all your labor. You should be adjusting your prices every 2 to 3 years maximum. Every single year at Augusta, we are slowly bumping up prices, either on the labor side or on the material side, kind of like back and forth year by year. So usually I'd say every 2 years, we're affecting both of them. So like 1 year we raise up the hourly rate. The next year we raise up the material costs on our pricing sheet. But at the end of the day, the only reason we're not trying to make more money. We're just trying to keep up with inflation. All right. As the cost of business goes up, your prices must go up. This is why I'm very afraid of people that have been in the business in the lawn care industry for 20 years because they get so wrapped up in the fact that they've had customers for so long, they're afraid to raise their prices, and inflation is eating them alive. A successful business 10 years ago could literally be wiped out because of inflation. Your profit margins completely obliterated. The cost of labor, like now, you need $15 to $20 an hour to get a decent labor. 20 years ago, $8, $5, $7 per hour. The cost of inflation is dramatically increasing. And we're going to get into that in just a second. You must raise your prices. All right, now what's happened recently, and this is why I'm talking about this today, is because you've probably heard recently quite a bit about inflation. As the monetary policy of the United States has changed over the past 12 months due to the coronavirus, COVID-19, the stimulus response, literally trillions and trillions of dollars, well over $4 trillion has been pumped into the economy. As money is poured into the economy and people start buying more things, it creates more demand. As demand goes up, price goes up. So if you don't know what I'm talking about demand, the supply and demand curve. As demand for products and services goes up, the price of those products and services also goes up. So if you give people a bunch of money and they start buying a bunch of things, the demand is going to increase, and therefore the price of those goods and services will go up. That's why everyone's afraid right now about inflation, because all this money has been pumped into the system, and now they're expecting no longer 2%. Over the next few years, they're expecting 3 to 5%, probably around 4% inflation. And the Fed is actually saying that they are welcoming this because they have a new federal policy, a new economic policy they're looking at, and it's called a flexible inflation. So in the past, they've always shot for like 1.5 to 2% inflation. That's like been their golden spot. Every year they try to like manipulate interest rates. They try to manipulate how much bond they're buying. Basically, like quantitative easing, that's called. They try to basically manipulate, make sure that we stay at about 1.5 to 2% inflation. It's healthy for the economy. It doesn't devalue our currency, etc. A bunch of macroeconomic junk. Now we look at how does that affect our business? If we go to 4% inflation for the next few years, that means that this is massively going to eat into your profits. Because now, let's pretend that for the next 3 years, instead of 2%, we're going to experience 4% inflation. Okay, so year number one, let's see here, 4% inflation is happening now. Like literally, this type of video will get hardly any views. Like right now, we have 50 people live versus when I was talking about bi-weekly versus weekly mailing, I had like 120. But I promise you, this is eating people's lunch right now. All right, so let's go ahead and change inflation now to 4%. Inflation. If you guys like me doing these live videos on the whiteboard, please give me a like. It does take me time to set this all up. Oh, you know what? I just realized you guys can't see some of this. Sick. I'm sorry. All right, that should be able to be better now. Okay, so now you can see all my numbers. Except you can't see Bob's name, poor guy. But please give me a like. If you like this setup, I will do more of these in the future. The audio will get better as we improve the set and everything. But I hope that this is helpful for all of you. Okay. Let's go ahead and talk about what happens at 4% inflation, because this is very, very possible that in the next 3 years, we experience 4% inflation. Now, I haven't done the math and written this down, so let's try to do the math. I'm horrible at doing math on camera. I'm actually pretty good in person, but let's see how this works. So in 2021, if we have a 4% inflation, now we're going to have 16% as our profit margin because the cost of labor goes up. Guess what? Very hard to find laborers right now because there's this thing called the stimulus package and this thing called the unemployment boost of $300 per week, which means if someone made $200 from the state, now they're making $500 per week to sit at home and play Xbox. That's really, really hard to compete against when you're asking someone to work outside in the hot, blazing heat. It sounds really, really nice to be able to sit at home, do nothing, and make money. So guess what we're going to have to do? We're going to have to raise our prices we're going to have to raise our wages, I should say, to get good laborers. This has been the hardest year across the board for finding good laborers. Now, if you're like, oh, I got this great labor, it was no problem. Okay, but I'm talking about like scale, like trying to find a lot of employees. Very difficult right now. This has been the hardest year for us ever. In the past, we put a couple Craigslist ads up, got like tons of applicants. We wouldn't have half of them come in for an interview. Now we're using Facebook, Indeed, Craigslist, all the rest of it to get good applicants. And a big reason, because it's really hard to compete against the government, who is literally printing money and giving people stimulus checks and giving them free money to stay at home. Now, if someone lost a job, I get it. But when it comes to trying to compete against them, guess what we're going to have to do? We are going to have to raise how much we're able to pay them, either through P for P, pay for performance, profit sharing, or our hourly rate is going to have to go up to attract employees to actually work hard out in the field. Now, 4% inflation is going to now mean that we have 16% of our profit. So now it goes from 20% profit, now we're down to 14 in 1 year. In 1 year. So now if we do the math here, that means that this is now going to be 80,000 after 1 year. After 1 year, inflation alone, this silent killer of profit, took out $20,000 in 1 year. So if last year you're like, I made $100,000, we are golden. Guess what? Just inflation, without you doing anything different, without you changing anything in your business, you could literally lose $20,000 in profit. Okay. Now, what's going to happen after 2025? After 4% for 5 years, literally you could be, because technically if you run the numbers here, it'd be at 0%. So like, let's run the numbers. Okay, here we go. We're not raising our prices, anything like that. Year number 2, so 2022, we're going to be at, let's just fire through this. 2022 equal 12%. Okay, 2023, we're going to equal 8%. 2024 equals 4%. Literally, 4 years from now, your Bob here could be literally making $20,000 in profit if he doesn't raise his prices, if he doesn't change anything in his business, if he doesn't raise the cost of his rate to the consumer, if he doesn't charge more per yard of material, if he didn't charge more for plants, if he doesn't have a higher material markup, if he doesn't charge an estimate fee, if he doesn't charge dumping fees, if he doesn't make sure that he actually gets paid what he's worth and continues to increase that every year, he can literally get wiped out. Now, some of you, again, yes, this would actually be more around 6 or 7% because of, this is not a linear path. Interest does not work that way. But again, you get the point. His business literally can get crushed over the next 4 to 8 years simply by the silent killer of inflation. As inflation goes higher, if we do not raise our prices, you are losing profits. Because you are going to have to pay more for employees. You are going to have to pay more for fuel. Even over the past 6 months, you've seen the cost of fuel go up. As the cost of oil goes up in inflationary times. That's why way back in the day, they had like the whole oil crisis and people were like lined up for miles, paying all crazy amounts of money for fuel. They were in high inflationary periods of time. When you look at places like Zimbabwe, where they literally brought wheelbarrows of cash, it's because of inflation, okay? So what does this mean for your business? You need to raise your labor cost. You need to raise your material cost. You need to add dumping fees, estimate fees, etc., to cover one thing. Because this is the third thing we haven't talked about. We talked about material costs going up. We talked about labor costs going up. There's this thing that's going to happen. I predict, and trust me, it doesn't take a prophet to realize what's going to happen in the next several years. And that is that at $100,000 of profit, guess what's going to happen in the next few years? A little thing called taxes is going to go up. Now, you literally have to be smoking something very strong to not think that taxes are not going to go up in the next 5 years. Because we can't print $4 trillion in money, be at 0% interest, and not think that taxes are not going to go up. All right? Just the fact that people are getting money for free right now, staying at home, doing absolutely nothing, and that life is just hunky-dory right now, and everyone's just living off the government, trust me, taxes are going to go up. Just guarantee it. So maybe in the past, if Bob was paying, getting $100,000, and he was in an income bracket after he did some deductions, he did maybe his Roth IRA to do some savings without having to pay taxes, etc. Maybe he paid a whopping, let's say, $20,000 in taxes. All right, so maybe 20%. Okay. Well, now let's say in 5 years, 5 years goes by, and now instead of paying 20% taxes, he's now going to be at 40% taxes. 40%. Guess what? Instead of getting 80,000 take home now, he's literally going to go all the way down to 60,000 take home pay, assuming that his 40% tax bracket is now happening. So same amount of money, he's still profiting. The business is the same. He actually, let's say he actually did raise the amount of money that his prices. He raised his prices by 4% every year. He actually stayed up with inflation, but let's just say his take-home pay stayed the same, $100,000 take-home pay, but with the cost of taxes going up now, literally probably doubling his tax bracket, taking away certain tax credits, etc., he's going down to $60,000. This is going to happen. This is going to happen. And trust me, you want to be on the right side of inflation. That is, you're actually ahead of inflation. You're charging the correct pricing. You're raising your prices. And again, you can't just like, oh, I'm going to raise prices. Woohoo, let's go. You've got to increase value. We talk about almost every single live stream. You've got to increase value in order for prices to be able to be elastic enough to actually raise them. All right. So that is inflation in a little nutshell and why you need to pay attention to it. And I promise you, inflation is going to pick up. I promise you inflation over the next few years is going to exceed 2%. There's people out there like, oh no, it's not going to happen. Some people are expecting like 6%. I don't think it's going to go that high, just my personal opinion. I think it's going to average, because this is the thing that the government's saying. They're like, hey, over the next 10 years, we just want inflation to average around 2%. Well, it's been almost deflationary, like almost negative the past 12 months. So what they're trying to do is they're going to let the economy run hot. That's what they say, and pump a bunch of money in. Inflation's going to up, say 3 or 4%, but over the course of 5 or 10 years, it's still around 2%, because they're looking at now this whole average inflation number. Okay, so all 70 plus of you that are now watching this, please hit the like button, join the Facebook group, join the texting group, and let's jump into some questions. All right. Yeah, like everything is going to go up. Fertilizer, fuel, everything, prices are going to go up more and more. The cost of transportation is like your trucks, guess what? In the past 6 months, used vehicles have gone up on average by 15%. If you go to a Honda dealer right now, good luck trying to get a mower for like the next 3 months because they're so backed up. Guess what? Demand's gone up. People are buying. There was also a shortage on supply because coronavirus shut down the factories. So when you either increase demand or you reduce supply, price goes up. Guess what we've done in the past 12 months? We've done both. We've given people a bunch of money, and therefore now we have massive amounts of demand. Landscapers have money. They've been given PPP loans, EIDL loans. They've been given stimulus checks. All of these things. All the money's there, demand's high, and now supply is lower because the factories have been shut down by the coronavirus. And yes, I do know that by saying the word coronavirus, I lose money on my monetization, but that's fine because that's what it is. All right, comments. I'm going to pull these up. Okay, would it be trailers too? Like, my goodness, finding a trailer right now is a pain in the neck. Everyone's so backed up when it comes to our manufacturers. Let me go ahead and put this bad boy up, pull up your questions, and here we go. Hey, Mike, I know you have a Mooresville, North Carolina location. Isn't there another one new coming in? Yeah, there's a couple that are in the works. What is the most professional way to ask for money from a customer? I honestly try to get their credit card information on file so you don't have to ask them for anything. You just charge them when you want to. If the internet is lagging, you better have a chat with that gym owner next door. I know, Chuck. Tell me about it. No clauses in my contract for gas prices increasing. Is this something I should be worried about? No, Jack, I would not, put clauses in my, like, I know some people have said like, hey, if it goes over $4 a gallon, we charge a premium or we charge some sort of fee. Personally, I don't really like that. I would, because then you got customers arguing over like, oh, well, my gas is like, oh, the gas price went down. Do I want my price down again? Like, I want the fee. No. Like, look, I'm going to raise my prices above inflation. So over time, I can stay ahead of the curve and they don't have any sort of, leeway on that. Does this change your mind on incurring fixed interest debt? It doesn't change my mind because I feel like, this is a great point. Okay, so what Josh is saying here, I know who this is. Josh, bless your heart. So what he's saying here is, okay, if I have fixed interest at 4% interest rate, now with inflation, if inflation goes to 4%, technically I'm getting free money. So this is why I took out EIDL loans when the government gave them to me, because the interest rate that they're at is going to, in my opinion, be lower than or equal to what inflation is going to be next few years. So I'll be able to pay it off over the next few years and basically have borrowed the money for free. Okay, so this is definitely something to think about. Yes, if you can get fixed interest rates right now when they're really low, they're starting to swing back up. They're starting to swing back up right now because you can't go like negative. Like you can't go down forever. So they're starting to come back a little bit right now. But yes, I have taken on more debt in the past 12 months than I ever thought I would, mostly for like real estate, like trying to lock in refinancing and doing cash out refinances on real estate because like the interest rates are so low. So yeah, like if I can lock in a 2.5% interest rate on real estate and inflation is going to be at 4%, like I'm making money to borrow the money. So yes, that is absolutely a good point there. However, whenever you borrow money, you're implementing risk. And in my opinion, a lot of landscapers just do not know how to manage that risk very well. They go out and they take interest-bearing loans and go buy assets that depreciate at like a higher rate than inflation. Like if I have a 10-year lifespan on a truck, that means that there's 10% coming off of it every year. Like I'm now borrowing money, paying interest on money that's now going to buy an asset that's decreasing in value. So to answer your question directly, Josh, I would say yes to especially assets that are increasing in value. And if you have an asset in terms of a business that you can pump money into, great time to take fixed interest debt right now. Thanks for the great, helpful content, Mike. Your story is so inspiring. You've been super helpful in motivating me to be better business owner. God bless you. Thank you. Victor, Mike, thank you for all the information you provide. My biggest concern this year going into my second year, I always send all my inquiries, all the mowing prices, but with fuel going up in Illinois, how can I ask the customer that we need to raise price in order to make a profit? If you go to the course section, templates and downloads, there's a letter that we've used many times and literally have had less than 1% of people cancel because of a price raise. It's just really simple. You just assume the sale. Don't ask them to call you. Don't say, if you have questions, let us know. Like just say, hey, here's the new prices. We're starting on this date. Let's roll. But yeah, that's in the course, templates and downloads section. Just download the price increase letter. Mike, what should I be doing? What should I be doing? You're a smaller company just hitting 100K. We're getting a lot of calls, but work tends to slow down around August during the summer months. We're really busy, and being an owner operator with one full-time employee, do I hire another person to be able to do more of the work so I can focus on lining more work up, or keep going with one? We have very minimum business debt. Okay, Tori, go ahead. Like if you want to expand, you want to grow, you're doing 100,000 revenue by yourself. That's pretty good. I'd go get an employee if I was you. You have my blessing. Lawn Care Journeyman. By the way, join the franchise and you get free coaching calls. That is true. That is true. Do you know the Facebook group sign up link, or your page doesn't work? Try a different account. So I do screen out literally half of the people that try to get into the Facebook group. So if you don't know what I'm talking about right now, I'm going to go ahead and throw this up for you, what they're talking about. The Facebook group, turkey sandwich. There you go. That's the Facebook group. Go ahead and join that. It's completely free. But keep in mind, I do have to screen, like every day there's probably 20 to 30 people asking to get in. And I screen them quickly. Like I don't have the time to like look at everyone's pages and everything. But if someone hasn't been on Facebook very long, or they don't have a lot of pictures, or it looks slimy, or like they're out of like some weird country, I'm just blocking them. I'm not blocking them. I'm just declining them. So try from a different account, or try to apply again to get into the group, and maybe send me a DM just so I know that you're legit or whatever. Okay, let's keep going here. Hey, Mike, this is my first year, a legitimate licensed, insured, and full-time. I'm having a really hard time finding mowing customers. Landscaping is no problem. What do you recommend? I would recommend making all your marketing really centered around recurring services and mowing, and then allowing those landscaping jobs to come to you natively because of the brand awareness and because your mowing customers come to you first when they have a project. Because I want to focus on a long-term strategy is recurring services. Short-term, I can always go out and sell more landscaping jobs very easily, especially right now when there's so much money and people's home equity is so high and they have so much free liquid cash. Yes, paper patios and walls this year are going to do incredible. But I don't know what's going to happen in 3 or 4 years. What happens when we have another March 2020? What happens if we have a 2005 to 2008 scenario when people don't have the money and people are afraid and they constrict for longer than a month like we had last year? If in that scenario, I'd much rather have that long-term strategy of having recurring revenue. I do door hangers, door-to-door knocking, and just started Facebook ads. Yeah, it's the same thing I would say. In terms of going, I would just keep doing the door knocking, all that sort of thing. Just keep this in mind. Fill your schedule with landscaping, but always focus on your marketing with mowing for the long term. That's my opinion. That's how we built Augusta, and that's how we kind of teach at Augusta Lawn Care. Yay. I'm trying to do like different times just to catch people, and I'm trying to do it more on the weekends too, just because I know a lot of you are working. So good information. Thank you. I reached out to my fertilizer distributor to place an order, and each bag of fertilizer was $3 more times 40 bags per pallet times 20 pallets. Ouch. Yeah. So right there, you got 120 times 20. So you're looking at $2,400 extra for your fertilizer this year. Guess what? You need to be increasing your prices by that, at least that amount, right? So absolutely, fertilizer is going to go up, fuel is going to go up, cost of your trucks are going up, taxes are going up, basically everything is going up. So your prices better be going up, or else you're going to be left in the dust. I am smoking something. Can the government just give me my 2019? Can I just have my 2019 tax return money? It's been over a year, Uncle Sam. What is the most professional way to ask a customer for more money if you underestimate a spring cleanup? Take it in the mouth. Honestly, in my opinion, if it's a spring cleanup, small job, it's not worthy of a work change order. Just take it in your mouth. You learn from it. On your next one, go get the next one. Don't spend so much time going over a spring cleanup. Like, just learn, okay, I misbudgeted this. Okay, in the future, I know that when that happens, I see that in a property, it's going to take me longer than I thought. That weeding didn't take 5 minutes. It took me 25. I got this cool little podium here now. That's why I'm able to do this live here, is I'm able to like raise this up. It's super cool. It's like all like hydraulics. Super cool. Look at that. All right. So let's go ahead and go to the next question. Thank you. This is your favorite. Oh, thank you, guys. About to buy my mowing equipment to start prospecting for clients. In bit of a dilemma. How about to buy my mowing equipment to start prospect? Okay, you got this backwards, Richard. Let me see here. Actually, you're saying wifey is a property manager, and she can get me in about 4 to 6 properties that can probably bring in some money right off the bat. Buy bigger equipment and start big, or ease into it? Okay, definitely ease into it. And this scenario, this is what I hope that I can reach younger guys before they do this. Because everyone goes out and buys a big truck, big trailer, bunch of mowing equipment, and then goes and finds mowing customers. They have it backwards. Go get the customers, and then as you grow, build up their truck and your mower. And guess what? You might find out when you start marketing that you get certain mowing customers, and the type and profile of properties, you don't need certain equipment. Like, why would you go buy all the equipment and then go look for customers? It's backwards. So that's kind of a big passion of why we're even trying to get into Snapchat and Instagram and like TikTok next month. I hired someone just for those platforms because I'm trying to go for the young guys that think that they got to go buy the stuff and then go get customers. No, you need to get customers that then create revenue and profit and cash flow that will cover the cost of that equipment, and you'll be able to make a better educated buying decision when it comes to that equipment. So if you estimate a $600 job and you think you did more than $600 worth, you just charge without telling them you're charging more. No, that's not what I meant. I meant you would eat it. Like, just charge them the $600. Like, you say, well, I should have charged $750. Okay, just let it go, water under the bridge. As long as you only did what was on the estimate and there was no like change in scope of work, I would take it, eat it, learn from it, and on the next one, make sure you charge more. Do not, in my opinion, go after another $150 from that customer. Just take it, learn from it, and on the next one, charge $750. Unless the scope of work changed. Now, if the scope of work changed, then you should have done a work change order before the end of the job so that the customer knew that the price was going to go up because what they're asking of you had changed. How do you feel about raising prices? Yes, I like it. At least, this is the thing about raising it every year. Then the client starts to be like, oh, you raised it last year, now you raised it again. Are you going to keep raising it? So I usually try to raise more like 10% every couple of years instead of raising like 2 or 3% every year. I know some people do it that way and it works great for them. I just happy you're raising prices. I don't care how you do it, just do it. Like, yeah, that's all I would say. Whether it be, there's several ways you can raise prices, right? Like, you can raise prices by increasing your minimum rate. Like, for example, on mowing, you say, okay, instead of charging only 25 per cut, I'm going to move that to 30. Okay, that's going to raise your prices. You can raise your prices by, okay, instead of charging $50 per hour, oh, was here before, instead of charging $50 per hour, I'm going to charge 55. That's a 10% increase. So you probably don't have to do that every year, but you might want to do it every couple of years. Dump fees, estimate fees, markup on materials, all of those things are areas you can raise prices. We got almost 100 people watching tonight. Thanks, guys. What's your minimum mow price? It ranges across the system. I think it's 32 at most of our locations, to be honest with you, but some of our markets are a lot cheaper, like El Paso, Louisiana. There's areas where they are cheaper. Danny! Okay, so Danny, you're live. So Danny's our new film guy. He's been working for about a month and a half now, I think. And he made the video a couple days ago, Entrepreneur's Journey. If you guys can watch that and show some love in the comments to him, he's worked very hard on that, and I really appreciate his hard work. How do you feel about listening to Fortunate Son by CCNR on replay while mowing? Unfortunately, I don't know what that is. I am very bad at anything movies, pop culture, or music, to be perfectly honest. Jesus, what are those values that never lose value? What are those values? I think you mean like, what are those assets? Like I'm talking like real estate, things that are going to go up in value or provide value to the business. So for example, buying a truck, you say, well, it's a depreciating asset. I'm not going to get any debt on it. Not necessarily, because if you get debt on it, but it's a good purchase and it's going to last you 5 years and you're going to make $200,000 because of your $15,000 purchase, probably a good buying decision, right? So most of my marketing is towards mowing. I just can't find people interested in it. Ben. Okay, so again, you can't say it's because of your service. Look at your marketing. Should you be on a different platform? Should you be doing different? Is your branding off? Do you have a website? Because there's a good chance they're getting your door hanger and then going and trying to find you online. Those are all the different layers. Like, so like sometimes people are like, oh, like door knocking doesn't work. It's like, well, yeah, but when they got your door hanger and they talked to you and then they went online, did they see a bunch of bad reviews? Did they see nothing at all? Did you show up in, dirty uniform, or did you show up with a polo? Like these are all so many different factors. So yeah, just keep that in mind too. It's hard to kind of Ben, unfortunately, I don't know who you are, your brand, your website, any of that, sort of your pricing and things like that, what you look like when you go door knocking, all that stuff. So there's a lot of facets I can't see, obviously, but hopefully that kind of triggered something. What is a good debt to income ratio to stay under to leverage growth without getting overextended? I'm thinking about using 10% income to finance mowers for a second crew. So this is what I would do, because really what it has to do here is someone asked me this other day, like how much money should I be having in the bank in terms of just like reserves? It really comes down to your risk tolerance, right? Like, so for example, when it comes to reserves, I said, well, look, some people are going to want 3 months worth of revenue in the bank. Some people are only going to want 1 month's worth of payroll. And some people are going to want 1 month's worth of cash flow. Like, so there's so many different ranges. It depends on your risk tolerance, right? And so when it comes to this, how much debt would you be having? Again, I wouldn't be looking at percentage like that as much as I would be looking at how much did your first crew profit? So for example, I love having the whiteboard. If I can get in the habit of doing Q&A in front of this whiteboard and actually start answering questions, there's going to be so much better information come out on these Q&As. Let me tell you what. So, oh goodness, clumsy. So if we have a business, if you're crew one, David, if your crew one, pumps out $40,000. I know I'm just making up a number. Like, come on, give me a break here. Let's just say it's a solo route. They do $40,000 in profit over the course of a year. Okay, that's their profit. Now, let's say, okay, now let's look at crew two, which is a potential based upon whether or not you take out the loan, okay? So now the question is, what is the cost of capital? Cost of capital is what's the interest going to be, et cetera. So let's say, for example, well, if we just look at payments, which includes principal, so cost of capital traditionally only refers to interest, all right? So the cost of getting that money. Whoops, can you guys see that? Oh, good. Cost of capital typically only talks about interest. But if you want to be a little more conservative, because the interest on, let's say, a whole crew, a truck setup, everything, let's just say $40,000. Let's say $30,000 for your new truck and the equipment that you need. And so let's say that the interest on that is $200 a month. So then the interest over the course of a year would be $2,400. So then if you look at, okay, cost of capital is only $2,400. If I can make $40,000 on profit per year because of that, like, let's go. Like, this is a great deal. Now, but if you look at it more from a more conservative standpoint, your payments per month might be, let's just say $1,000 per month to get this equipment. So now we're looking at $12,000 in payments, most of that going towards principal. So in this case, $9,600. Oh, you guys can't see this. Don't worry. all is not lost. $9,600 in this case would be going towards principal pay down, like the actual cost of the loan, the actual $40,000 that we had to, $30,000 in debt. I hope this didn't make too much complications for you guys, sorry. But basically, if we have $30,000 in debt, we have $200 per month, $200 per month in interest. That's $2,400 per year in interest. That is the cost of capital. If you want to be really liberal in terms of getting debt, that's what people look at. Okay, a cost of capital, $2,400. Sometimes people will take depreciation off this too, by the way, but $2,400 versus I can profit $40,000. Let's go. Now, a little more conservative is, okay, I got $12,000 per year in payments, and 96 of that's going to principal, 2,400 is going to interest. But at the end of the day, I'm doing $12,000 in payments. But again, I can make $40,000 in profit. So if I take 40,000 minus 12, I still can do $28,000 in profit because I borrowed this money. And that's on an annual basis. Then what you can do even more conservative is, okay, that $30,000 debt, maybe I amortize it over 5 years. So I'm going to lose $6,000 in amortization or depreciation, I should say, every single year. Then you could say, okay, well, I'm going to add, I know this is a little bit over your guys' head, but we'll listen to this a few times if it is, okay? Because this is really important. Then you really should be adding $6,000 per year in depreciation to those assets. And now this becomes 18, and this becomes 22, okay? So at the end of the day, you start asking yourself, okay, so am I willing to make $22,000 per year, have a $1,000 payment, and pay this off of maybe 3 or 4 years? But again, you're not going to make $40,000 profit like you did in your crew number one because now you have this debt burden, okay? So these are things to think about. I know that was like a little bit deeper. Watch it a few times. It will make sense. Well, that answered my question after I had already responded again. Thanks. Thanks for the help, Mike. You really helped me a lot in shaping a legitimate business. Have you had a hard time finding land or warehouses for your franchises? Keep looking. Chuck over in North Carolina is killing it, crushing it. He's doing amazing. He was the one that yesterday in the beginning of my video, I gave a shout out to. He's just doing a great job. He just found some space. Our New York location, corporately owned location, just found new space. You just got to keep looking and finding and trying to find a spot. We have, we create for our franchisees like a one-page kind of lease that they can give to homeowners and landowners and potential retail or storage areas. That really helps. So if you do that, it gives you some legitimacy. So you can go to places and ask for space, things like that. Oh, okay. Man, too many questions. Okay, I'm going to have to go quickly here, guys. Sorry. Maybe they mean a 48, a 22, a string trimmer, and a backpack to start with. That's a good starter set. You can run that with or without a trailer. What's your opinion on every door direct mail? Pros and cons. Damien, just search at EDDM, Mike Andes, and I've done a few videos on that in the past. Real estate can also go down. We need an options market on real estate. This is true. However, if your cash flow, again, this is the beautiful thing about real estate, in my opinion. Yes, it's slower growing. Yes, it can go down in value. This is the thing. If inflation's going up, traditionally rent is going up. And if rent is going up, then I can cash flow and I don't have to sell, right? So, you're only losing money on a stock or an asset of any sort, like real estate, if you sell when it's low. So if the value of that real estate is going down, but rents are going up, or even if they're staying somewhat stable, or I didn't over leverage myself and I got good interest rates and I'm able to at least cover my mortgage and get through that time, then we're good, right? But you're exactly right. There absolutely, real estate can go down. Thank you for you're the best. You answer my question. Gabriel, do your employees have pest care applicators license in order to use Roundup on your customer's property? Gabriel, this is something that we recently changed. We're going all organic to be able to get around this. Again, simplification, making things more and more simple. And I will be making a video hopefully in the next few weeks on some of the products we're using, as well as why we made the change. But it's, again, just trying to get very, very simplified services and make things more scalable. Because at the local office, I'm there less than an hour a week, and there's a lot of employees and they're hiring new people and all the rest of it, and I want it as simple as possible. I'm not going to get I don't want them all having to have applicators licenses. Hey, just got here. Thank you for the motivation and tough love, Mike. Oh, Dean, yeah, I am keeping the same goals I came into the year with. 2021 is going to be awesome. I can't get engagement on my next door local deals to save my life. How have they worked for you? We are sponsored as well. Would you consider making a video on local deals like you did for Facebook? Yeah, so sponsorships, in my opinion, are not good product. Local deals are a good product. You got to have a good creative. Like your picture needs to look good. You can't just have a random, like their stock photos. You need to make a good picture, and you need to make sure that you have a catchy text too. That's what we've seen, like literally. Yeah, anyways, I gotta keep moving along. I always show up in good clothing, usually a button-up or professional collared pullover. I do have a website, but very little online presence for reviews, as I didn't have an online presence before. Yeah, Ben, so it's like, there's never one thing. It's rarely one thing that will fix your marketing. It's like a multi-level approach, right? So what do they see? Can they see those reviews when they go and search you up online? Do you have video? Do you have pictures? Is your pricing way off? Is it way too low? Like all sorts of different things. There's so many different varied things, right? So should I have a website set up before door knocking to increase? Yes, in my opinion, yes. Didn't want to take on that expense before necessary. I want to be Apple-like with branding and pricing. Okay, so Richard, this is the exact reason why with lawn care web design, we do not have the upfront fee, because I want someone to start and for it to prove that it's worth having. And in my opinion, if you're going to go door knocking, you need to have a good online presence. So if you leave a door hanger, the first thing they're going to do if they want a good quality service is they're going to look you up online. What did I miss? I just see a bunch of numbers. Eddie, you're gonna have to watch it. The reason I like doing this live stream, by the way, some people don't like it. And I get that. I totally understand they're longer form, etc. But I try to stack the content at the beginning. So if you just want that, you can leave afterwards. And the better thing is I don't have to spend time uploading. As soon as this stream is done, you guys can watch it on YouTube. That's awesome. I don't have to edit. I don't have to move cards. I don't have to do anything. It's just live. I love it. All right, love the whiteboard. Awesome. Good evening. Have you ever thought about doing an HOA package, giving a discount for 100 plus accounts? We haven't really, to be perfectly honest. We don't want HOAs. We haven't had good experiences with them, just in terms of our business model, right? When you're going after, like, residential is different than HOAs. HOAs are commercial, and it's worse because now you have like 100 different bosses. They all think they can control you, tell you what to do. HOAs can be good if you're in certain markets, but in our market, for example, we have never had great luck with HOAs. We'd rather just stick to our core competency, which is residential, 10,000 square feet, less proper turf, etc. In Virginia, it doesn't matter if it's organic, you must have applicator's license to spray in a commercial setting. Yeah, Daryl, so in that case, then you gotta get your applicator's license. In our market, if we're doing chemicals and things, we have to, otherwise we do all organic stuff. All right, thank you so much, everyone. I really appreciate you guys. It's Saturday evening. I appreciate everyone that's joined Lawn Care Web Design the past week, landscapebusinesscourse.com. We hired Zach, who just started with us on Thursday. He's going to be working on Facebook and Instagram stuff, so expect that to get a lot better. We have now animated. We're starting to work on, and we've finished the first phase of animating Max, our mascot. He's going to be doing a lot of really cool stuff on Instagram and Facebook, though. Look forward to that in the next few weeks. And then in April, we're going to have someone on TikTok and on Snapchat. I'm really trying to capture that younger audience, trying to change the perception of what it means to get into business in this industry. Again, like literally the question tonight, focus on getting customers and then go buy equipment. Don't go buy equipment because you saw on Instagram and think that that's what you need to go get customers. If I could just change that one thing, it'd be worth me hiring these 2 extra people. And obviously Danny, who's live tonight, killing it as well. So I appreciate that's all of you that supported me doing this is why we're able to hire these people, produce more content. And my goal and ambition is to change a lot of the perceptions that we talk about in terms of value and price, so that people raise their prices according to inflation. And we're not all out there price gouging each other and in a massive race to the bottom at $30 per cut. Okay, so thank you so much, everyone. Have a fantastic evening. I'll try to do a couple of lives each weekend for the time being, as long as I can. Thanks so much. We'll see you next time.